Hello, fellow traders. 'Tis I, TheRumpledOne. It is Sunday, October 27th. The year's 2019. Let's talk trading. Weekly open and gap. Okay, this is the last trading week for the month of October. So, I would imagine, if you've been watching my videos, you have been using excellent risk management and excellent money management all month long, right? And you're going to continue throughout the month. Okay, as far as the weekly gap goes, most of them have filled. We still have a couple of stragglers here. But as you can see, the gaps that haven't filled aren't that large. But chances are they'll still fill before the end of the week. But remember, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And Forex trading, as all trading, is very risky. You can lose all your money. So if you need financial advice, seek it from an accredited financial professional. That way, when you lose your money, you know it was lost by an accredited financial professional rather than someone you stumbled across on the internet. Okay, disclaimer out of the way. Now, I've had a trader or two that want me to kind of put it all together, explain things, as some people would call it, hold their hands. And it's really interesting how, some traders can pick up what I show and they can run with it and they're making money right from the get. Other traders struggle. What does that mean? It just means that some people, it works for some people, doesn't work for others. Some people can figure it out. Some people can't. It's just that simple. It's got nothing to do with the method and everything to do with the individual. You have to find a method that works for you. We all have different learning modalities. Some people learn by seeing, some by reading, some by doing with their hands, some by, just getting immersed in it. Some people can figure it out on their own. Some people have to be told every step, every minor detail. Now, one thing that a few traders have brought up that I don't know if disturbing is the right word, but they don't seem to understand the frequency distributions that I talk about. Now, see, this is something that I applied because when I was in college, I took statistics and I aced the course. And, so I understand statistics pretty well. Probably not as well as I did back in, when I graduated back in 1977. But I'm sure there's a few formulas I can't recall off the top of my head. But as far as the nuts and bolts and what I need, it's basically frequency distributions. And all the frequency distributions, only reason I use them is to let me know if the particular pair fits the method that I'm about to use. So if a pair doesn't really have that much range, then I probably am not going to use something like the rat zone or possibly the buy zone. It just depends. If they have a huge range, I'm all into the buy zone. I'm all into the rat zone. So those are the pairs I'm going to trade because of the methods I like to use. That's all I use it for. I don't use it to determine anything else other than pair selection. So I hope that clears up any misunderstanding. Now, and then some traders, they want to look at longer methods, meaning methods that apply to a longer term rather than scalping in and out or day trading in and out during the day. They want to place a trade on Sunday, Monday, or Tuesday possibly, and come back maybe Wednesday, Thursday, Friday and collect a profit. Well, that takes, I guess, some trading sense, not necessarily common sense, but trading sense. So what I've done here is I set up a chart and I've got two instances of my TRO-HL5 indicator. And this was the 5th version of the high-low indicator, and all I made it do in the beginning, all it did was plot the high and the low. And I just modified it like crazy up to version 5, and I quit. I actually came out with version 6, but I just went back to version 5. I can't even remember what version 6 was supposed to do. But I realized the problem was if I keep renaming the indicators, it kind of messes up people's templates. It's like it renders them, unusable unless you know how to go in and tweak a template, which most people don't. So I just kind of stick with the same name. That way, even though I'm improving the indicator and changing inputs or modifying inputs, it doesn't have any negative effect on the work you've already done. So as I said, I put in two instances. One for the week. That's where the computer just froze. Anyway, one instance is for 1 week ago, and one instance of TRO-HL5 is for 1 month ago. And so all I'm doing is showing basically the high, the candle top, the candle bottom, and the candle low, okay? And so, well, why would I look at 1 month ago? Well, if you're going to trade and you want to trade long term, then you're going to really want to get in at a weekly or monthly extreme. So here on the dollar yen, you can see as I move this around, here last month, here was the high. So what happened, okay, over the past week, we're on a daily chart, see D1 is in blue, so that we were at that monthly high. So what happened was, and we were at a weekly bottom right here. So which way to trade? Well, if you just follow the daily candle color, you see it moved up as it crossed these lines. You see, we crossed below, or we opened below the previous month's high. If we would have just taken that trade, that would have been good for about 20 pips. Now, one trader wanted to see something like 30 or 50 pips. I don't target 30 or 50 pips. That's just not my style of trading. If I sat around and waited for 30 or 50 pips, chances are price would turn around and stop me out, even though I could have had 20 pips or 10 pips. So that's just not my way of trading. So maybe this doesn't work for the way you want to trade. I'm not trying to force my methods onto anybody. I'm just here to share them. But let's look at a couple of different pairs here. Okay, so what do we have here? We've got the euro yen, okay? And you can see here, once again, at an extreme, at the previous month's high, it dipped below, came back above. Here it shot above. And so once again, looking at those extremes, but if we want to go back and look what happened over the entire month, okay. So you can see here, this was last month's low. And this month, you see, we dipped in basically in the previous candle's body right in here. And then we came right back up, right through that high. And that was good for hundreds of pips. So you notice I don't have any daily markings on here because the trader was asking about longer term. So just looking at the month and looking at the week. So, but really you're focusing on the month for these extremes because month has a range, just like the week has a range and the day has a range for the pairs, right? And the monthly range is usually bigger than the weekly and usually bigger than the daily, because if the daily can't be bigger than the monthly, right? Just, you know, the current daily could be bigger than the previous monthly, but during the current month, no. That's just math. So once again, just looking at the previous month and then looking at the week, you can maybe use the week to determine whether or not you want to take profit. Okay, let's pick another pair, Euro USD. And you can see here, once again, we started the month down here, we dipped below the previous month's low, came back up through that monthly wick zone, and price just kept going. Let's see, how about pound dollar? Okay, here again, we want to look at the monthly extreme. So here's a previous month's high. Price shot through it, came back down, shot through it again, and that was good for what? Hundreds of pips, right? And that's what the trader wanted. So this is how you can get those larger trades. And this is how you can set these ahead of time. You already know what the previous month's high is. You already know what the previous month's low is. The question is, do you want to trade the breakout or do you want to trade the reversal? That's the question you have to answer. And how do you determine that? Well, if you switch back to the monthly chart, look, price was way down here at this bottom. And if you scrunch the chart up, you can see it's making these lows. So wouldn't it make sense to maybe go for the reversal? You could set a pretty tight stop, maybe 20 or 30 pips here. And the gains would have been huge. So just look for these monthly extremes. I mean, you know, I can show you things. I could put up a dashboard and all that, but I'm just trying to show you, you don't need those. I'm not trying to sell you anything. I'm just trying to show you how you can do this on your own. Okay, let's see. We've done dollar yen. We've done euro dollar. We've done pound dollar. So let's get the last major, the pound. I'm sorry, the dollar franc, the last of the majors. So if you look at here, if you scrunch the chart, okay, you can see it's trading in a very tight range. And so when you bring it out, it's almost like, well, it doesn't look like when you're looking at these monthly breaks that there's many pips to get. Well, you know, back here in 2018, you know, there was a nice break, and here was a nice break back in 2018. And then possibly here a couple of months ago, I think this is what candle is this? May, June candle. You know, there was a nice break, but see, recently, you're just not getting those breaks. So you might want to exclude this pair. And this is just looking at the chart with just some, you know, simple horizontal lines, looking at the last month's candle. Let's look at dollar Canadian. That's had some action, but see here again, there's really not much happening here. But it's still some nice movement on the monthly, but probably not the kind of movement that, you know, the guy who wants 30 to 50 pips is looking for. We can always look at the beast. I mean, here's a good example. There's a nice breakout here. There was a nice breakout there. There was a nice breakout there. So it kind of shows you, you know, looking at these breakouts on the monthly candles, that might be the way you want to trade. And you set your stop loss accordingly. So if you've got any more questions on this, you know, feel free to ask. And I try to answer questions that, you know, make sense to answer, because, you know, as Anthony Robbins says, you want a better answer, ask a better question. And as I say, it's not what you trade, it's how you trade it. So rest of the month, go out there and drain the banks.